Hello and welcome. This is Cashflow 2.0, the only podcast that walks you through the treacherous jungles of your financial statements and leads you on a path to not only overcoming some of the most costly mistakes that many new entrepreneurs make, but helps you make your money start working for you right now.
Sweet.
Join us today as Pam changes your financial future and makes finance fun.
Hey y'all, this is Pam. Welcome back to the second of our series on the See Your Cash forecast process. And last week we covered off on why that's so important. And this week we're going to talk about the first step of the how. So I'm really looking forward to diving into that. Hope you guys are having a great week, that things are going well for you. Things are exciting on the front in priorities and your first CFO. I'll share a little bit about that at the end of the show here today. But for now, I really want to dive in and give you all a couple actions you can take very quickly to get a handle on how to forecast your revenue. So just a really brief review of last week, which was the first of this series. And we talked about why being able to see your cash flow in advance is so important, especially for early stage entrepreneurs. And we talked about there being really kind of four different things that new entrepreneurs run into, startup businesses run into towards the beginning of their life cycle. And the first is, and one of the good reasons to be able to see what our cash is going to be doing, is in order to pay down our debt. Because we all have probably gotten into at least a little bit of debt early on in our businesses. If you haven't, that's fantastic. You can skip this step and move on to the next one. But we really do want to get a handle on how quickly we're going to be able to pay that debt down. The second thing that we run across after we've pretty much got our debt under control is getting past that feeling of the other shoe's going to drop. And I think all of us have been through that. It's once we've gotten a little bit successful, our business is generating some revenue, but then I have to have example after example of entrepreneur who said, I just don't believe it's going to last. And so that's another really good reason to have a good look at your cash flow and what's going to be happening in the future with that bank balance. The third reason that we'll run into once we really get comfortable we have a sustainable business model is we're going to want to grow. And knowing how much cash is available, and more importantly, when that cash is available, is incredibly important. So revisit last week's episode if you didn't catch it, and be sure and get an understanding around that, because that's the why behind what we're covering today. And then last but certainly not least, because it is very likely the most expensive piece of your business, or the largest expense in your business, is taxes. The sooner we can see into our cash flow, the sooner we can see into our profitability each year, the higher chance we have of minimizing our tax burden for the year. Legally, ethically, all the other things. But again, just reference last week's episode to get a real feel for the impact this can have on your business and on what is probably the most costly part of your business is taxes. So what I promised for today is sort of the first piece of forecasting, or of the See Your Cash forecast. And logically, we're going to kind of start at the top of the equation, or the money that comes into your business. So what I want to kind of prove to you today is this is much easier than it sounds on the surface. So on the surface, I would say something like, hey, you've got to forecast your revenues. And that's nice and lofty and sounds wonderful, but it kind of doesn't tell you where to start. And I think that's what keeps a lot of people, frankly, from diving into this process as entrepreneurs, because they're scared it's really burdensome and difficult. And what I want to prove to you today is that it's not, and we'll start with the revenue or the incoming cash side. And then next week, we'll cover off on some quick and easy ways to get a handle on forecasting your expenses. So let's talk about the income side. Even if you are not currently keeping your books in an accounting system like QuickBooks or Xero or YNAB or any of these really good products, you have access to predicting, or at least seeing, what your historical revenue has been. And that's really the first step towards forecasting. But let's break that down even more simply and pretend you have absolutely no record of your business income. You're not keeping it anywhere, right? You're not keeping an Excel, you're not keeping a manual journal anywhere, and you're not keeping an accounting system. One thing that is definitely happening is money is coming into your business if you've had revenue. And very simply, it's coming in somehow. So usually, and the easiest way to get at it is to look at it in your bank statement. So an exercise you could do today, if you wanted to, that will not take you more than half an hour, is log on to your bank where your checking account is, wherever your revenue is ultimately deposited, and download the statements for the last, great if you have 12 months, but even if you just go 6 months, that's fantastic. Just download those statements, that's it. And then all you have to do on each of those statements is look at the deposits that have come in. Okay, this is really oversimplifying, but it's oversimplifying for a reason. There really is not anything complicated to what we're talking about in cash flow forecasting. So if you look at the income that's come into your bank, how much has come in over some period of time, then you'll start to see two things. One is the grand total of about how much income has come in over a period of time. But the second is how it comes in. Does it all come in at once every 3 months? Or does it come in evenly every single month? Or is it rising? Is it falling? And really the other major piece of this that you're asking, and the reason you're asking it underneath this question is it consistent? So has it been coming in long enough that you're comfortable that you've got a solid revenue base? But let's talk about it, and let's look at two different situations. Let's look at one situation where you look back at your bank statement and you see that $10,000 is hitting your account every month. All right, so you've got a very even pattern, and it may be off by a few $100s either way, but you've got a very even pattern that says to you, you get a very steady income of $10,000 a month. So that's the baseline for this See Your Cash forecast. So just remember that. It looks like our average income is $10,000 a month. All you need to do right now is create a spreadsheet or even a handwritten document where you have a column for every month in the future. So the first column says, let's just pretend it is September. Your first column will say October, your second column will say November, your third column will say December, etc. And we'll actually put a link in the show notes for where you can get one of these templates already filled out with all the right months, so you don't have to worry about that. But all you're going to do is go out for the next however many months and drop $10,000 in each column, and bang, you're done forecasting your revenue. For now. We will add some complexity to that later because it's not that simple, but I wanted to put in front of you that actually getting the information and getting it somewhere where you can look at it is very straightforward and simple. So now that we have done that, we're going to pretend it's not quite as easy. And let's say you look back at your last 12 months of income into your bank statement. You print those bank statements down and you see that every 3 months you get a hit of $30,000, positive hit, deposit of around $30,000. And that makes sense because you realize you run a program that lasts 12 weeks, you collect the money up front, you run the program, and when that's over, you run the next program. So right off the bat, we're actually learning an awful lot, right? But very simply, when you lay out your forecast for revenue, you're going to go into that spreadsheet, and instead of putting $10,000 in each month, you're going to put $30,000 down every 3 months. And again, I'll give you the template where you can go ahead and do this without having to set the spreadsheet up. But at its very simplest, all you're doing is setting up a column for each month and then just putting the numbers in. And I'd go out 12 months just for fun. So really, we're done, okay? We've done all the research. It probably took me longer to say it than it's going to take you to actually do it. We've done all the research that's necessary for a very robust, actually, base to your cash flow forecast. Now, we can make it even more relevant for you And I do want to take a minute to dive into that because without a lot more work, you can add a lot more value to this see your cash forecast. And the first step in doing that is to look at what's feeding that income into your account. And for a lot of the folks that listen to me, that's going to be something like PayPal or Stripe or Square or QuickBooks Intuit's payment collection system. And the cool thing about those 4 systems, you can get even more clarity around how your income comes into your business by looking into those 4 systems. And you're going to have logons to those. You don't have to do this step, but the really neat thing about taking that step is that you start to see the different things that drive your revenue. So instead of just putting down a line in your forecast that says $10,000 a month, you could split that up and say it's actually $8,000 a month from my high-end coaching problem. I hope it's not a problem. Apparently it's a problem for me. It's $8,000 a month from your high-end coaching program, but it's $2,000 a month from your sales funnel that has in it a book and a training course and a webinar, say, so that you really now have broken that income level out into 2 pieces. And you know you're going to always have 2 clients a month that you'll charge $4,000, so you can leave that alone. But you know that you might crank up your Facebook ad spend at some point and increase that second piece of the business. Or you may decide not to sell your low-end products anymore. So now we're getting in a little bit back into the why of the forecast. But once you've got a little more clarity around the pieces of your income, then you can start to forecast them out if they just continued as they were today. But you've set yourself up now to have a model you can play with, right? So now you can say, so what happens if I add more Facebook ad spend? What happens if I add a second coach who can coach 2 more people in a month? So what you've created is, just by this one exercise today, going to look at your bank statements and maybe diving into your PayPal, Stripe, or Square account, is you set up the ability to be able to do what I call grown-up business forecasting. It's something that now lets you see your cash, which is why we call it the See Your Cash forecast. And it's the first step. In the next session or the next podcast, we're going to go over how to do this with your expenses. It's a little bit more complicated, but not much. I will need your exercise time will probably be about half an hour with next week's exercise as well. And most of you have probably figured out what next week's exercise looks like and sounds like. But it's pretty straightforward. And once those 2 pieces are done, then we've got something to play with, okay? And that's the really exciting episode. So for this week, just go take a look at where your money's come from and the timing of when it's come in. And then we'll move on to the expenses next week. And then we've got the key to making this tool something that you can literally look into the future and see your cash. And you can see that it's not all that hard to do. Like I said, it's going to take me longer to tell you what to do or suggest what you do here for these exercises than it is for you to actually do them. So I am going to sign off now, but we do definitely have a link to this cash flow spreadsheet in the show notes. So I'm really excited to get that into your hands so that you don't have to set up a spreadsheet. And like I said, if you are spreadsheet averse and you just don't want to have anything to do with a spreadsheet, you are an entrepreneur and you need to understand your numbers. And the why I hope I covered really well last week. So at least jot it down on a piece of paper. Even if you just jot it down on a piece of paper, we can still play with it. And then the really cool thing is, if we determine you have enough cash, you can hire somebody to do it for you so that you don't have to actually keep track of it, but you can get the benefit of knowing what the outcome and the information is. So that is our relatively short broadcast for today. I hope you have a fantastic week, and I look forward to bringing you the next step in this process on next week's episode. So have a fantastic week. This is Pam, your first CFO, checking out for the week.